Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Chicago wheat. Since mid-February, the market has taken a 3 steps down and 2 steps up pattern, repeating or trying to repeat this, gradually narrowing the range and creating a pink descending triangle pattern type, which we are just about finishing today and early next week. It is not a perfect pattern by any means. However, the upper tine of the February to March bearish shift pitch hook, currently at 539, as well as the purple neckline extension, currently at 542, of the February to April reverse head and shoulders bottom, have tried to reinforce this, though I have to say, and that's February to April 2024, I have to say today they're not doing a very good job of it right now. Meanwhile, below, the pink lower trend line, currently at 536, has been breached for most of this week, though there has been no exploitation lower. I suspect this was due to the nearby 38.2% absolute Fibonacci line at 521. So we have some pretty good support below that held up the market effectively back in August last year, but we're gradually heading lower with lower highs. There is one other pattern that I've just drawn that may help in deciphering what is going on here. I've drawn a mid-March to mid-April bearish shift pitch hook, so far unhighlighted. This seems good right now despite its young age, at showing a shallower bearish angle of attack. Not by much, but still there. Prices are right now in between the middle time below, currently at 531, and the upper time above, currently at 555. All this action has nevertheless still left us with targets below for the descending triangle pattern of a primary target X in the 490 zone and a secondary, harder to achieve target X1 in the 471 zone. I'm not too sure about these, but for now they will do. Chicago corn. A major move was seen here at the end of February and going into March. The end of the upwards move was seen since the start of the year, and a quite sharp move lower. At the time I said, and I quote, "This all raises question as to whether we have a potential here for a further bearish halfway hesitation or a double bottom," end of quote. I even back then laid out some potential targets below for a move lower, but these turned out to be wrong and I have retired them all. Instead, the market followed the path for a double bottom for primary target X at 497 and a secondary target, harder to reach target X2 at 504. 2 weeks ago we reached target X, the primary target, at 497, but immediately pulled lower. This puts on hold the secondary harder to reach target X2 up at 504. Now, 6 weeks ago I said, and I quote, "To offset this bearishness I drew last week," so that's now 7 weeks ago, "I drew last week a late November 24 to early March 25 bullish shift pitch hook with a recent move. Right now I do not see much confidence in this pattern, but it's still there nevertheless. The reason I have low expectations is because of the possibility that the whole middle February to date action might be a bearish halfway hesitation." End of quote. As I've previously stated, the bearish halfway hesitation is no longer valid, but the dark blue late November 24 to early March 25 bullish pitch hook has become quite good at showing the overall bullish angle of attack. We're at this time in between the overhead dark blue middle time, currently at 493, and a dark blue lower time, currently at 453. On the downside, we have the lower trend line, currently at 461, of the July 23 to January 24 descending triangle. But I don't think this will be that much bother, though it's still there, whilst overhead we have the 50% Fibonacci line for the 2025 action at 481. This is not a strong resistance, this one, but it did erode the bullish incentive in early April. So with all this, I was still a little concerned about the April high and what it may mean. Thus, I have drawn today a mid-February to mid-April bearish shift pitch hook, unhighlighted so far, to try and capture any bearish incentive prompted by the peak in April. We are right now in between the upper time above, currently at 491, and the middle time below, currently at 455. I'll say no more on this one for now. Kansas City wheat. Since mid-February, the market has gradually narrowed the range until late April, with lower highs and higher lows, creating a sideways triangle pattern type, currently at 480 to 606. It is not a great looking pattern by any means, but it nevertheless still exists. And 2 weeks ago, prices pushed down below the pink lower trend line. At the same time, following on lower from a mid-March to date bearish halfway hesitation pattern. 3 weeks ago, prices also pushed below the middle time, currently at 559 of the February to March bearish shift pitchfork. And then last week, below the dark blue lower time, currently at 547 of the significant, very shallow, late August to early December 2024 bullish shift pitchfork. This was followed swiftly this week by moves below the March 25 low, the December 24 low, and finally halting at the August 24 low. Now these lows have one thing in common. They are all as a result of the 38.2% absolute Fibonacci line that sits below, as a similar one does for Chicago wheat. Here it's at 533, and is the reason we have seen prices pull up today as well. There's also a couple of other features that I'd like to expand upon that may help in deciphering what is going on. I've drawn a mid-March to mid-April bearish shift pitchfork, so far unhighlighted. This seems good right now, despite its young age, at showing the bearish angle of attack, the recent bearish angle of attack. Prices are right now in between the middle time below, currently at 502, and the upper time above, currently at 556. It is more acutely bearish here than in Chicago. All this action has nevertheless still left us with some targets below for the descending triangle pattern. It's not even the descending triangle, for the sideways triangle pattern. We have a primary target X in the 522 zone, not too far away, and a secondary hard to reach target X1 down at 471. I'm still not sure about these two, but for now they will do. We also have the mid-March to date bearish halfway hesitation. For this, well, we have reached that downside target this week. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpick and ADM Investor Service International Limited. And here comes the final important bit.